How can we say that printing money doesn't matter? Well, we'd all like to have a lot of it, but in terms of the large economy of the United States, it really doesn't matter, or at least not very much, because it is only a small part of what we call money. So, currency, printed bills, are produced by the Bureau of Engraving and Printing of the U.S. Department of the Treasury. If you visit Washington, D.C., you can visit the facility and watch it being printed. Coins are also part of our money, usually not considered currency, so we'll start saying coins and currency. But coins are produced by the U.S. Mint, also part of the U.S. Treasury Department. If you visit Denver or Philadelphia, you can visit one of their facilities and watch the coins being made. So we have currency and coins in the U.S. economy. Bankers, economists, other people involved in finance use what is called M1 as the initial measure of our money supply in the United States. That consists of currency and coin in circulation and of demand deposits such as checking accounts. So coins and currency in circulation. This means they are placed into circulation in the economy and are not in storage at the Mint, not in storage at the Bureau of Engraving and Printing, and not in storage at the Federal Reserve Bank, which is a main player in all of this. The money is out there circulating among the public, among the businesses. It's not what's kept in reserve at the government or at the Federal Reserve. M2 is M1 plus time deposits. These are things like money market funds, certificates of deposit, where you can't always get your money immediately. On some money market funds, there's an overnight wait. You have a 60-day certificate of deposit. You are to get your money plus interest back on the 60th day. If you need to withdraw it on the 30th day, you might face a penalty of 5% or 10%. So M2 consists of M1 plus deposits that are not quite as readily available. Here are the figures for M1 and M2. That's in the trillions, so that's a lot of money. The currency and coins in circulation amount to $2 trillion. A lot of money, but only a fraction of the real money supply. So it is not a mainstay of the U.S. economy. How do currency and coins get into circulation? They are released through the Federal Reserve Bank and then through the member banks and on through credit unions and other facilities. So I write you a check. The check is for $1. Congratulations. You're richer. So I write you a check for $1. You take it to your bank to withdraw the dollar. The bank takes the check, hands you a dollar bill or 4 quarters or 10 dimes or whatever you would like, and puts the check into processing. Where did that dollar bill come from? Well, it came from the teller's cash drawer, but ultimately it came from the vault, and before that it came from the Federal Reserve, and before that it came from the Bureau of Engraving and Printing. So there's various monies in storage along the way. You take the dollar and you spend it. The party that you gave the dollar to deposits in their account. The dollar bill goes into the cash drawer, goes into the vault. The check is then processed and my account is debited by $1. Now, those checking deposits are electronic entries, not currency sitting in a vault. They're electronic entries on the computer of the banking system. But where did the dollar come from to cover the check? It came out of my checking account. Well, what was in my checking account? X amount of dollars as electronic entries, not as currency and not as coins. You spent the dollar, and the person you spent the dollar with made up their deposit and took it to the bank and deposited the dollar. Now, their account is credited with $1, an electronic entry. So most of that money supply consists of electronic entries, not currency, not coins. How do the currency and coins get into the system? Released to the banks by the Federal Reserve via the accounts of the member banks. Because the banks that are members of the Federal Reserve are in truth the owners of the Federal Reserve. How did the dollar get into the system in the first place? In circulation, available to the public to make purchases and sales. It was from the bank, from the vault, from the Federal Reserve, which has a supply of currency from the Bureau of Engraving and Printing, as it has a supply of coins from the U.S. Mint. And as these are needed really for petty cash transactions in the economy for the most part, the banks release the money into the system because somebody brought in a check or somebody made an automatic clearinghouse transfer electronically to release the funds, and the person receiving the funds happened to want it in currency and or coins and not just keep it in their account. The coins and currency are released by the Federal Reserve Bank as a lubricant for the transactions, fewer all the time, that are now handled in cash. So therefore, the amount of currency being printed, the amount of coins being minted, constitute something for the efficiency of the economy, but are not really a major component within the money supply itself. I hope today's video was informative, interesting, and helpful for you. And if it was, please give us a like and be sure to subscribe and click the notifications bell so you don't miss out on any of the new videos we'll have coming up. In the meantime, here are some videos I can suggest for you.